Good afternoon, everyone. Steve Georgia here from Allendale's trading floor. It's May 26, 2011. Had a very interesting day today as far as the grains. Started off very strong with a lot of weather concerns, a lot of bullishness behind this weather, a lot of rain coming in. At least through the weekend, does look like it could clear out as we work into next week and the week after, for that matter. So that may be a little bit negative, but as of right now, we've got a lot of things to work through. And you look at some of these, you look at some of the states out there and how far along they are as far as planting. Corn in general, Ohio only 11% planted as of Monday, 49% here in Indiana. So it's still, the concern is are we going to get the acres for corn? Are we going to see the type of yields that we're getting now that you've got some ponding out there in certain fields, and that's not what we need. With tight stocks right now, we need to have good conditions, and that's where we saw some strength early on today. The outside markets were very negative, but the concern yet for the grains still very bullish. And we finished quite a bit off the highs, though. We finished 13 cents off the highs for July corn. July corn only finishing 3 1/4 cents higher. December was up 5.5. That December contract for corn came up and made new highs today. So just barely, about 3/4 cent, but we did make some new highs. Once we saw December going to make new highs, we found that old crop, new crop spread unwind. And that spread itself had a 10-cent range today. So pretty wild, violent range for that spread. And we did finish with the old crop down a little bit over new crop. So, but overall finishing a little higher for corn in general. Beans up 7 3/4 for July, up 11.5 for November. But as I mentioned, just like corn finished off their highs, we had beans 14 cents off of theirs. And then really the wheat. The wheat's kind of what drug everything up as well. Not only was weather bullish, but you had spring wheat. So that Minneapolis wheat contract, more than 40 cents higher at one point. Very, very strong. Chicago was up quite a bit, close to 30 cents at one time. Up 18 cents is where we finished, though. So we did finish off the highs, 14 cents off of their highs. So when you look at this and you look at it in general, this wheat market could really take off. We're watching that Minneapolis wheat right now, that spring wheat. A lot of acres didn't get planted there. You've got a lot of concern with that milling wheat. Are we going to have enough? We remember what happened in 2007. A lot of guys trying to build that case again. You've got European wheat problems. French milling wheat made new highs. Well, we came in and made new highs for our spring wheat as well. That 1080 area, which is pretty close to the highs today, is going to be a very pivotal point. So keep that in mind as we work through. We did settle off of those highs today, but watch that spring wheat contract. Watch that Minneapolis at that 1080 area. We could see this pretty explosive if we move above that. This is being led by the cash markets. You've got bids coming in, quite a bit of bids coming in right now. The demand is there for the physical product, and we're seeing the price jump accordingly. But if we see wheat go up, corn will probably go up, and same thing here with beans. The idea is that grains are still friendly. Outside markets, though, a lot of times, a lot of this week and last week, we're talking about outside market influence. Crude oil down $1.12 right now. So we've had this $100 mark as a pretty good battleground, and we closed above it yesterday. We're at about 120 cents right now, so we're back down to that. We dipped below it shortly today, briefly, and then we ended up coming back, but down about $1.12, staying around this $100 mark, and we'll see how it wants to finish out. But we've got the end of the month, tomorrow, and also ahead of a long weekend. You may find a little more profit taking here as these funds try to take risk off the table. We've seen a good run this week for that. We might find that risk try to pull back a little bit. The dollar down 35 after those economic reports this morning that were a little bit negative for the U.S. economy. We saw the dollar go down almost 60 cents at one point. Currently down about 35 cents, putting that at 75.67. Really some of the points that we're watching there, you've got good support near that 75 area. And on the upside, that resistance is 76.54. If we punch above 76.54, we could take this market back up near $79 to $80 yet for the dollar. So watch those areas. We're looking for that as some pretty good support and resistance. The stock market today started off pretty negative. Right now, up about 25 points. So we're putting that back at 12,418, still looking pretty good. And we did find a pretty decent recovery off these lows today, but we'll need to follow through with that tomorrow going into this weekend. The metals staying a little bit negative. Gold down $5, silver down 25 to 30 cents, but just a minor pullback after some of the rallies we've seen in the last few days. Soft market's taking a little bit of a break today. Sugar up 7 cents. That's after being quite a bit lower. You've got some concern here. We may be bottoming a little in the sugar, but we're watching this trend. The trend is still down. We're coming up to a good trend line for that, so be careful trying to jump on the long side of that sugar yet. But we did recover today off the lows, just as everything else had as well. Cotton down, though, 500 points lower. We did almost go limit today. Didn't quite get there, though. We've got 6-cent limits, but we were down 500 points. And if you look at that chart, we are still in an uptrend, but we're 60 cents off of the highs already for cotton. So a lot of that shifting, that bullishness is shifting from that July contract out to new crop, out to that December. So watch for that. I think that spread could narrow in a little bit more, and that might be something to follow for you guys out there. Livestock, we know it's been an absolute bloodbath over the last few weeks. Cattle down another 60 cents today after recovering a little yesterday. Box beef, we had choice down about 10 cents, select down 8, so not much change there. Feeders dropping back $1.35. Feeders are down right now about $2.25 for the week. So even though we've seen a lot of change, still down just a few dollars for the week, but we'll see what tomorrow wants to bring there. Hogs, different story. Down 42 cents today. They have been pressured quite a bit with lack of demand out there. Grilling season not really kicking off yet. Cold weather and rainy, so the demand certainly isn't there for the pork, and that's pretty evident. For the week, it's down $4.10. So that has got things on the defensive. Technicals are negative right now. The fundamentals are a little bit negative, and the charts certainly don't look good. But we'll see if we can try to find a bottom in here as we go into the next few weeks, with the weather outlook warming up and looks to have a little more sunshine out there for us as well. So we'll see if that demand can kick in. But threw a lot at you guys today. Call me with any questions or call us over here at 800-262-7538. You can always check us out on the web, allendale-inc.com. Have yourself a great one, and we'll talk to you next week. Take care.